Good evening, this is Jack from Charting the Markets, and this is the Bigger Picture webinar for the evening of Wednesday, the 7th of May. My disclaimer, I do this for educational purposes only. I'm here to share my technical analysis with you. I hope you can take somewhat of data, learn from it, transfer it to your own charts. I'm not here to issue trading signals. Right, I was a little concerned this morning in the pre-market video when I was doing I was having a look at the possible head and shoulder necklines that were forming on the various indices. You can see the ES1 continued on, broke down, and then rejected back higher, which is good because I'm still expecting to see a retest of the high. So that was a concern. NQ did the same, broke down, rejected. RTY, because I was also concerned, particularly that we had on all four of the indices. Again, we didn't break down on this one, but it's gone above the right shoulder. On YM, we didn't break down either. Pretty close to the retest of the rally highs now, and I'm thinking we are likely to see those in the next couple of days. DAX, I'm still thinking we may well see a retest of the high here. I've got that up at about the 23,750 area. ESTX is not likely to do a retest of the high, not unless everything goes significantly higher. Okay, let's have a look at the bigger picture charts. Okay, I've got a pretty clear target on SPX. If we're going to reach this trend line, I've got that at about the 55 area. And that's the area where I'd like to see. That's if it hits on Thursday. Obviously, it's receding. It's heading upwards. So the longer it takes, obviously, the higher it goes. In terms of the 200 DMA, I've got that at 57.47. That's a pretty good match, and that is the key resistance trend line that I am watching. All right, let's have a look at the Qs. Qs has already tested the 200 DMA. Doesn't have quite as high to go. No, it's already actually hit this high. So ideally, it would just come back and retest and not break the trend line again. Not hugely significant if it does, but it raises a question mark over this trend line, which looks as though it has been hit and overthrown at the moment. On Dyer has been testing the 50 DMA and has been basically closed actually exactly on it. So in terms of the 200 DMA, I'm skeptical about it getting that far, but for what it's worth, it's up at 419.94. Dyer has also hit and slightly overthrown the resistance here, so I'd be looking for a high retest, but not much higher. I'm thinking we might actually see a rally high tomorrow. I'm not seeing a lot of reason to think that we're not going to see some more downside here, and it's setting up for it. And the thing which I haven't mentioned so far, which I should, is that as soon as we see the high retest, we've got an RSI 5 sell signal brewing on SPX, we've got one brewing on NQ, we've got one brewing on Dyer, and these are my favorite kind of daily sell signal. So would this mean that these are bear flags and we would reject all the way back to the low? Well, that's kind of what a bear flag is. And that would be my lean, but we would have to see how it went. This is a very, very news intensive market. Okay, let's have a look at IWM. And IWM, we have basically been testing the 50 DMA, and it closed almost on it. Not expecting to see the 200 DMA, which is all the way up at 215.68, because IWM has taken a very different path down, having made the high here in November. Looking at the 15-minute chart, I'd like to see, it could be that this would be okay. It doesn't have an anchor, but I would like to see a test of the resistance trend line here, which I've got currently in about the 205.5 area. All right, looking at DAX and the STX, DAX pretty close to a retest of the high, 23.4K against 23.5K. I think it should do that. And we're over the 50 DMA on Nikkei. Not really expecting to see a break over the 200 DMA at 38,000. All right, let's have a look at the DX chart. Now, DX, we had this IHS break up. It hasn't failed, but it hasn't actually been doing anything either. I'm thinking this may well be a bull flag. It's breaking up, and I still think we've got a shot at making this this IHS target in the 101.5 area. If we do, then we will be pretty close to testing the declining resistance, which I've now got slightly over 102. ZB, we saw a breakdown below this rising support. We've seen a rally, which looks like a bear flag, and I'm looking for continuation downwards. We haven't quite made this target here at 113.20, but I'm leaning towards seeing lower and probably heading back into these lows. Now, these lows were kind of a crisis low, and I would say I've been glad that equities have been holding up, even though all the various canaries I look at in this particular coal mine have been looking extremely unwell. ZB is one of them, CL is another, and they haven't been looking great. GC heading back up into the highs, but we'll get to those. All right, let's have a look at US dollar and, well, basically currencies and bonds. Let's have a look at those now. Okay, on the US dollar chart, we've got no divergence here. We've got a little IHS here, and it looks as though we might be in a bull flag, which is about to break up. It could just reject back into the lows, but I'm still liking this. And as I mentioned, we're getting pretty close to this declining resistance, which would be a great place to test and reverse that. Looking at TNX, TNX, we had a little RSI 5 buy signal, sell signal fix, and then we've got a little buy signal brewing at the moment. I think we might see a bit of a rally here while, I don't know, I mean, well, we may well see a rally here, FOMC, whatever. But I mean, we've got positive divergence at the low today. Bigger picture, I am expecting this to head back up to 45.92 and then in due course back up to 49.97. We shall see how that goes. Right, let's have a look at CL. CL, we've got, we had an IHS that failed, an IHS broke down, that made target. We've got a third possible IHS here. Now, how would this make sense? Well, actually, I think what we might be looking at here is an overall bear flag. It doesn't have to play out this way, but it wouldn't be a bad bear flag. It's what I'm wondering is if we're going to see another leg up, get up into the 65, 66 area, and then fail there back into the lows. We shall see. As it is, this didn't quite retest the low, and it didn't retest the low on the continuous chart either. Looking at NG, NG, I think we had a move up here. We had a little bull flag. I think that's broken up, and I think we're likely to see a retest this high in the 3.75 area. What happens after that? I don't know. Bigger picture, in terms of a contracting economy, which I think is pretty obviously what we're looking at here, then I would expect energy to be weak. We will see how that goes. All right. Actually, before we do that, sorry, I forgot to cover, have a quick look at the various currency pairs. Euro USD. Still wondering about a test of this rising support currently in the 1.121 area. Looking at GBP USD, there's an argument for a bigger retracement, but we haven't actually seen it yet. Maybe we'll see it, maybe we won't. We do have a potential level top here, but on the bigger picture, the picture looks rather more bullish. So this looks like a falling wedge, broken up, and it looks as though we're going to be going considerably higher. Looking at USD JPY, possible head and shoulders forming here. That isn't a great head and shoulders, but it's not awful either. Bigger picture though, very much supporting this possible head and shoulders you've got forming here is the pattern target that we would have for the head and shoulders, which should actually be pretty close to this support trend line, which is the next obvious trend line, target trend line within this rising megaphone. All right, looking at USD CAD. Buy signals on RSI 5 and RSI 14. Those are, to a degree, bullish for the US dollar, which is positively correlated with this. Testing the daily middle band at the moment, hasn't got over it yet. Australian dollar, kind of a mess in terms of a bottoming setup. No current divergence. We had an RSI 5 sell signal and that on the daily chart, and that failed. NZUSD, we've still got a weak RSI 5 sell signal there. Nice looking double bottom here, and it's pausing on the way to the target. I'm expecting it'll be back on the way there fairly soon. I've got that in the 62 to 62.25 area. All right, moving on to oil and gas. Okay, oil, we've actually got an RSI 5 buy signal fixed, and this is part of what I'm thinking about in terms of the possible flag we've got here. Flag or triangle, but I'm thinking we see another leg up here. That would probably get us back over the daily middle band, which was pretty solid resistance last time. I think, overall, this would likely be forming a bear flag. And I think bigger picture, this isn't looking good in terms of a shrinking economy, in terms of what Saudi Arabia is doing on production. It's not looking great. So could this RSI 5 buy signal fail? Always. And we have got 2 other fails on this chart, but I think we're probably going to see some more upside before it fails. So we'll see how that goes. All right, looking at natural gas, we have had a nice little rally here. Not a lot to say that this has actually got legs, and it's going to go a great deal further. This might just be a retracement within an overall downtrend. So I'm keeping an open mind on this, again, with equities looking weak and likely to be turning back down soon. This is not a great bet because energy, of course, tends to go down. 40% of US electricity is produced by natural gas. That is likely to weaken as economic activity weakens. Okay, let's have a look at GC. GC has actually made it a lot of the way back to the top. This looks like a bull flag forming at the moment. No current divergence on its side. Still not doing a great deal, thinking there is an overall bull flag forming here. On palladium, RSI, a 60-minute sell signal is fixed. Possible little head and shoulders forming, although it's not really a nice enough head and shoulders for me to have drawn in the neckline. On platinum, our 60-minute sell signal has reached the possible near miss target. On HG, still got a possible head and shoulders here, but that really needs to break down in the next 3 or 4 days. Otherwise, the right shoulder will be looking improbably large compared to the left shoulder. Bigger picture, leaning to the short side here because copper very much tends to go down when economies are contracting. All right, let's have a look at KC. Let's have a look at the bigger picture charts on this. Right, nice hold of the daily middle band on gold. Expecting to see a retest of 3,500 soon. We could, of course, do an ABC flag, but at the moment I'm not seeing any indication that's going to happen. And I think if we're going to see a test turn down decent retracement on equities soon, then chances are we're going to see a retest of the high and may well be higher on gold. Okay, silver. Silver, this looks like a bull flag forming. It still looks like a bull flag forming. I've got flag resistance in about 34.5 area. Breakup looks for, 34.86, which isn't a hugely high target, but should start another leg up. Possible target up at this channel resistance up at about 39 area now. That would be a nice target. Palladium. I'm still wondering about a retest of the lows. Haven't seen it yet. Platinum's still in its very long 3-year consolidation. Just to put some perspective on that, that's the last 3 years. Is this a triangle? Yes. Where would that likely to break out? I don't think we've got a definitive answer there, but I would say the odds would favor a break downwards. But in the event that we see a significant pullback on equities, given that platinum and palladium are both industrial metals, then they may go down with them. Okay, let's have a look at copper. Copper, I've got a nice looking double top here. It's easier to see on this one here. We've been seeing a rally after the first move down, but when we got to this 5.35 high, I was warning that I was expecting it to go down. I thought this might well be a second high of a double top, and I think we're going to be heading down to that double top support next in the 3.75 area. Okay, looking at the GDX chart, nothing really to say much on the 60-minute. No real indication there, and not much on the daily either. So we shall see. All right, let's have a look at KC. Now, KC, we actually had a head and shoulders and it broke down here and it's failed because we went back over the right shoulder. This has a target back up at a retest of this high, which it would usually hit. We've got a weak 60-minute buy signal fixed, which is supporting it. Okay, looking at sugar. We are kicking around near the lows, and obviously, as I've mentioned on the bigger picture charts, there's this potential head and shoulder target, which is down at basically half of the current level. So I'm wary about it heading off in that direction. I would not be long sugar on this setup. CC, heading back into the double bottom resistance. That's already broken up with the target in the 11,250 area, and provisionally, I'm quite liking that. ZW still looks like a bear flag forming or a consolidation. I'm wondering whether we're owed a visit to a retest of 495.5, and we may well be. Corn has gone back and retested the low I was expecting it to retest. More to say about this on the daily chart. On soy, Soy, we've got a head and shoulders, and it's definitely giving some significant thought to breaking down, but it hasn't actually broken down yet. If it does break down, then this would have a target in about the 1005 area, I think. And that would be a better fit with the problems that soy is having with tariffs than the rally that we've been seeing in recent weeks. Okay, looking at cotton, we've got haven't quite reached the retest of this high yet. I'm still expecting to see that. 60-minute sell signal is fixed and has made target. On lumber, tiny bit of positive divergence here. A weak 60-minute buy signal might be due a bit of a rally here, but really this is badly moving in recent weeks. If equities start going down, though, it's like they're likely to carry it with it. Live cattle has continued higher, broken this rising support trend line, but I'm not sure how significant that is. At the moment, not seeing anything compelling saying this isn't going to continue going up. On lean hogs, still deciding whether or not it's going to make this head and this double top target. I've got that in the 95 to 95.5 area, and it might make it. We shall see. All right, let's have a look at those on the bigger picture charts. And coffee. Coffee on the daily chart, I'm really leaning towards seeing a retest of the high. On the bigger picture, this is a very rich valuation by historical standards. And if we see a test of 4.41, I'm leaning towards that being the second high of a double top. On sugar, we have broken down, and if you look at the weekly chart, you can see we've got this huge head and shoulders, which is trying to break down with a target a long way below. At the moment, that's the main thing on the chart for me. We don't have any divergence on the weekly chart. And our RSI 5 buy signal that fixed a while back on sugar is really on the verge of failing. So again, not a great time to be long, I don't think. Now, cocoa, again, by historical standards, in fact, even more so than coffee, is in very rarefied territory, and has been for a couple of years now. Could this be a double top? No, it's too big. I've marked in the lines just to show basically that it's too big. You don't get targets that go this far down below anything we've seen in the last 20 years, and really at this stage it's almost the extended target would be almost going down to zero. So I'm not expecting that, but I am thinking it may well break down. In the short term, though, we're seeing a bit of action to the upside. We have got an RSI 14 buy signal still, although that's made the possible near miss target now. I'm expecting to see a retest of 910.69, and I'm quite liking some upside on top of that. Maybe. We shall see. All right, looking at wheat. We've got, on all of the grains, we've got falling wedges which have broken up and look as though they're bottoming out. Here, the bottoming setup would be improved if we saw a retest of 495.50. Doesn't mean we absolutely have to, but we're pretty close to it, and I'm thinking it may well retest. Looking at the daily chart, no current divergence. Looking at corn, again, falling wedge. This looks as though it might be a bear flag. So what I'm watching on here is it hasn't broken down from the flag yet, but if it does, then I think that might be heading for a retest of 385. It might just hold this level and continue up from there, but I've been watching this since I was had this drawn before Sunday's the bigger picture, and well, here we are. It's this is hold or fold. If it breaks below it, chances are it's on the way back to 385. Looking at corn on the daily chart, no current divergence, but you can see that wasn't a bad touch of that today. Really not bad at all. I'm watching this with great interest. Okay, looking at soybeans. On the weekly chart, we've got a wedge, but it hasn't actually broken up here. I'm leaning towards this being a bear flag forming at the moment. This could break down at any time, but it's pretty close to a test of this declining resistance, although really I'm surprised it's got this far up in it. I would not be at all surprised to see this break down. All right, looking at cotton. We've got a weak RSI 14 buy signal fixed, and we have seen a move which almost got us back up to declining resistance. Now, it hasn't quite made it yet, and that really is the obvious next target. Looking at the daily chart, this was a very spiky move. I'm still expecting to see a retest of that trend line. It's still the next obvious target within this wedge, and really, I'm thinking it may well break up when it gets there. Looking at lumber, Still fairly formless. I'm leaning towards the downside, and I think this is probably a bear flag for me over the last couple of years. We shall see. All right, great. In that case, that's a wrap. I will catch you guys again on Sunday. Watch out for a potential high to be made on Thursday and Friday this week. We don't necessarily have to go down, but to be honest, nothing has changed. Pharmaceutical tariffs are apparently coming our way next. The White House is still very, very, very keen on tariffs. No one's really talking. There's nothing particularly to be cheerful about. I was talking about this. I was expecting to see this rally, but I was thinking we'd see a decent rally, and then chances are we'd come back, retest the lows, and we might well go lower. And at the moment, I'm not seeing anything to suggest that won't happen. In which case, if these are bear flags, where I think the obvious high to be made on that is likely to be in the next couple of days. We'll see how that goes. All right, catch you guys Sunday. Cheers.